Alright everyone, here we are with another video with Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video and to stay tuned on in towards the second half of the video, guys. Right after this chart analysis, I have a ticker symbol to share with you guys, as well as the opportunities I mentioned on Friday morning. And if you want to know what stocks I watch daily, you're more than welcome to join us. On Friday, I was able to find 3 home run opportunities, all reaching 20% plus at their highest point of possibility, and that's something you can gain access to by joining. The link is down below in the description to the Discord, and by joining you'll become part of a growing community of investors all looking to learn and grow together, and we look forward to having you join us. So Xela, Exela Technologies Inc. What's going on here? Well, we've seen this one going downwards, right? We've talked about it, how this could have become a bull trap and it pulled back. We were watching this one consciously, and then it started to pull back again. So I had stated, okay, this is looking like it has strength. It broke through the 50-day moving average. It had some nice consolidation there. The question is, could it stay at these levels and then push itself up? Or is it going to go back into weakness, showing that this was a bull trap? There's been a lot of bull traps in many different charts forming right now, right? While the S&P 500 index keeps on going higher. That's the part where you have to remind yourself the disconnect that was going on back here in February towards March, and even throughout May and April, how the stock market kept going higher, yet portfolios of individuals and these small cap stocks were disconnected from the rise that the S&P 500 was having. So it is important to be aware of that, and here we are seeing it going in the opposite direction. Now, a lot of investors are expecting this one to squeeze, and that's why there's a lot of speculation and hype behind it, but we are in bearish territory. We've broken through some important support levels, and right now it's getting really close to 228, which is the next one, and then we have down here about 185 being the next point of reference to watch. So keep those numbers in mind, and what is going on in the more narrow perspective is what we're going to talk about right now. So 50-day moving average is key, 263. That's what the bulls need to break through to reach newer highs and get back into bullish territory. But before doing that, they have to stay above this support level, and that's 231. That's the first point of reference I would watch to see how this is reacting between 231 and the next support, and if the bulls are trying to reappear and bring it back up, or if the bears are tearing this one down. Now, the first resistance level is 244. That's just an indicator of momentum, but beyond that, the next point of reference would be up here at about 259, and if that gets broken through, the next point of reference would then be the 50-day moving average, get up, reach newer highs, and then the resistance level, which is one of the highest points on the day before of this falling even further, and that is 272. I would dissect the chart with all these areas to watch carefully how it reacts within these areas, and if the bulls are dominating the chart or if the bears are pulling this one down further. If you learned something new, don't forget to subscribe, click on the bell so you don't miss a single video that I post. Share this with a friend so they can receive the insight as well. And all I ask for in return is 3 to 5 more minutes of your time. I have a ticker symbol to share with you guys, as well as the opportunities I mentioned on Friday morning. And if you want to know what stocks I watch daily, the link is down below in the description to the Discord. And we look forward to having you join us. Stay tuned. So the ticker symbol I have to share with you guys today is one that I've talked about before since it was at $38, and we're going to look at its price action since then and how it's reacted. But before we look at that chart and everything about it and that ticker symbol, I want to share with you guys the opportunities I mentioned this morning over at the Discord. And if that's something that interests you and you want to become part of, you're more than welcome to join us. The link is down below in the description to the Discord, and by joining, you'll become part of a growing community of investors all looking to learn and grow together through the volatility of the market. Today, I managed to find 3 home run opportunities of 20% plus. On the day, we went 3 for 3 with these stocks. So these were the stocks we were watching: NRXP, ACOR, and MDGS. Okay, MDGS was our top performer early on in the day, and our best performer in the whole entire day was NRXP. So we're going to look at this in just a moment and how these charts reacted. And if this is something you want to become part of, you're more than welcome to join us. The link is down below in the description. and we look forward to having you join us. So NRXP, we talked about it as it was falling. It jumped up from those lows all the way up to $22 and some change, nearly a 15 to 20% plus jump in just a few minutes. It fell down, hit lows around the $16 mark and low 17s, and took off for the rest of the day, guys. Forget about this large jump here towards the end of the day. Just from that point forward, within about an hour and a half, this stock jumped up nearly 20% plus. But for the day, it had a highest point of 50% plus. This was phenomenal. Now, the other ticker symbol was NDGS, and we caught this one in the pre-market as it was pushing upwards, consolidated, took off, and gave about 20% plus in just a few minutes, guys, from those lows to those highs. Pulled right back down, and then right at the bell, took off and gave a highest point of 30% plus, guys. This was a phenomenal way to start the day, and through the volatility, it gave jumps of 10 to 20% throughout that whole entire 3 times of dips and runs, dips and runs, dips and runs. I mean, this was filled with opportunity afterwards, as well as it was pulling downwards, presenting itself as another opportunity of 5 to 10%. Now we got ACOR. We caught this one in the pre-market as it was falling, and it pulled down to lows here of about 510, 515, and then it took off for a highest point of 20% plus. This was phenomenal as well as the day rolled out. ACOR in just a matter of minutes, about 10 minutes, ran 20% plus. So my goal daily is to try to catch stocks with momentum that can run in just a few minutes, guys. In just a few minutes, like MDGS, ACOR. Now this one turned out to be a little bit different, but in just about 3 minutes, it gave about a 10 to 20% plus opportunity as well. This one was pretty fast and in a blink of an eye, but it all happened so fast. It pulled down, but the rest of the day, it had momentum from that bottom. It's all about catching the dip, selling the rips. I know it sounds really easy to say, but it is possible, and it takes patience, dedication, and it's all about timing and execution. And this is something you can gain access to if you're interested. And like I said, we look forward to having you join us over at the Discord. Now, the ticker symbol I have to share with you guys today is TWTR, Twitter Inc., guys. This is a stock I've been talking about since $38. It ran 50% plus, pulled back down, and took off to a high here of $80 and some change. Now, this stock tends to fall pretty fast on overreactions, right? You could see that there every single time, and you could see it every single time an overreaction happens. Twitter Inc. falls pretty fast. But just as fast as it falls, it runs upwards. So the question is, will there be another overreaction, or did a slight one just happen? So I'm going to be watching for consolidation or further weakness. I'm not really going to pay attention if it goes up higher in strength, because this has ran a lot since $49. It's nearly up almost 100%, guys. A few more dollars and it reaches that. This is right now between 50% plus up, and it's something to watch, okay? Twitter Inc., if it falls in the next coming weeks or even month to the downside and ends up anywhere between that support level of $64 and down here at $55 and then all the way down to $49, it could present itself as an opportunity based off analysis ratings and the growth and expansion of this company, guys. Now, 2020 was not a great year for them, but quarterly they're coming back up towards the end of 2020 and the beginning of 2021, and earnings has been pretty spectacular, and it just continues to push upwards, guys. There's a lot of room for Twitter to continue to grow, and through every single overreaction, it's presenting itself as an opportunity. So if you don't have Twitter on your watch list or you didn't pay much attention to it, it's definitely a stock to keep in mind moving forward. As always, this is not financial advice. I'm just here to share with you guys the stocks I'm watching and why I'm watching them. In no shape or form am I telling you to buy, sell, or hold any of these positions, but I am here to enlighten everyone. As always, guys, thank you guys so much for watching, and let's make some money.